Another wild day in the markets. We are anticipating the inflation data to come through. By the time you're watching this video, it may already be out. What you're looking at is the SPY or the S&P 500 index, and you can see that it was relatively volatile yet another day. We are watching volatility pick up. This is measured by many different metrics, but on all of them, they are up. And this is historically not a very good sign. So we could see what happened. But why? Why is that the case? So we will talk about that right away. Fed's Waller promises to tackle inflation, says mistakes of the 1970s won't be repeated. We know what happened for the Fed not taking the job seriously on inflation in the 1970s, and we ain't gonna let that happen. So, this is a Fed governor, and this is what he had to say. And I found this so interesting, and I wanted to show it to you, okay? It is further down here. They had zero credibility. So, Volcker just basically said, I've just got to do this. Shock and awe. We don't have that problem right now. Quote, this is not a shock and awe Volcker moment. That right there is a statement enough to send the markets rallying, at least somewhat. They can pull it off its lows. Why? Because this is what the market is worried about. By the time you're watching this video, the inflation data may suggest that inflation has started to come down. And that's the transitory, that's the inflation is peaking story. We're going to ignore food and energy so that we can show that this is coming down. That is actually a possibility. If you look at what's happening with automobiles, cars, if you look at what's happening different places with certain aspects coming down from their absolute peak, yes, it is possible. As long as you're not going to include food, as long as you're not going to include energy, you can see that happen. But I mean, what's the point of calculating inflation anyway? So I thought it was interesting what else he said in here about Volcker. And if I could just find it, here we go. The Volcker moves took the Fed's benchmark interest rate to close to 20% and sent the economy into recession. Waller said that he had a conversation with former chair before his death. And Volcker said, quote, if I had known what was going to happen, I never would have done it. And I don't know if that's true. I obviously wasn't there, but I just found it interesting because it is seen as, a moment in which Volcker stepped up and said, we are going to make this happen. And I don't care if a recession would occur. But according to the quote, it's a different story, isn't it? Now, I've never heard anything like that before. So I want your input. Put it in the comments below. Do you think that's actually the case? Usually, you don't find a very, strongman type of attitude with anybody at the Federal Reserve. So hearing that kind of goes in line with this. This is the CPI year over year, and we could see that over the months it's been going up further and further, largely. And we have seen these sort of dips before, right? This is not the first instance, but could it be possible that it declines somewhat? And I do believe that that is actually the case. This is coming from Goldman Sachs. Strong services inflation will keep the sequential pace of core PCE, personal consumption expenditure, elevated through the year end. Year over year, core inflation will decline further in coming months as last year's sharp goods price increases drop out. Okay, so certain things skyrocketed. You measure it year over year, even though it could still be very high. When you do that measurement and look at it in that way, it could come down. That's all they're saying here. And I think it's actually possible. But does that mean that your food prices when you go to the grocery store are going to go down? No. Does that mean the gas prices are going to go down? No. But their measurement, CPI or PCE or whatever it might be, as long as you get rid of those food and energy, this could in fact go down slightly. It's possible. And if I didn't say it already, the markets are going to love that. Okay, why is that the case? Because the markets believe that this would suggest less hikes are needed. Less hikes means stocks can go higher. Prices are going up so fast at this restaurant that they're using stickers on the menu. You know where you see this kind of thing? In Venezuela, in Iran, in places that have hyperinflation, and is just crazy to think about. Okay? This is Miami, the Miami River Cafe, a Mexican place in the city's East Little Havana district. Just look at that. Look at it. Starting to see stickers over prices on menus reminds me of way back when in Venezuela. Um, Prices still look pretty cheap, though. I'll say that. But you can see that things have gone to a degree. Just people are not used to this. Let's just say that. There's more examples in here. Now this one breaks my heart. Skipping meals, racking up debt. How inflation is squeezing single parents. It's not just single parents, okay? I have seen your comments before. I have seen other articles. I've seen videos. I've seen it all. People are trying to do without food and say that, you know what, intermittent fasting is good for you. So it's okay. And I think whatever you want to do with your eating, that's your choice. But if it's simply that, if I eat one less meal a day, that's going to make me better off and so on, that, it hurts. It hurts. But anyway, I just try to bring out the information and do as best I can. I have a how-to and solutions playlist. I have several playlists, in fact, that may be of some service to people. So check those out if you have time. But it just, anyway, I can't go into that. Household debt nears $16 trillion despite rising rates and inflation. And we have seen over and over and over again that, of course, household debt will rise. Student loan debt. Is that a surprise? Of course not. And right now, being told that your student debt might be wiped out, of course, people are going to rack it up even further. Consumer debt and credit rose as well. Credit card debt doesn't matter the fact that it's 17% to 24% interest rates. People will rack up the debt. They do it. In some cases, they rack it up and think, okay, I'll just get another credit card to pay off that credit card. I'll get another credit card to pay off that credit. And it's just this endless loop of mass debt. This right here is what we get into when you see that some places could be seeing a decline in inflation to some degree, but this shows us a problem. Ukraine stops gas transit through the, I'm going to try to pronounce this, Sorenivka gas pipeline system due to loss of control over the Novopskov compressor station in Luhansk region. Okay, apologies for the pronunciations, okay? Almost a third of transit to Europe passed through this station. This just shows you how significant it is. All of Europe is relying considerably on this gas coming from Russia through Ukraine. And now they're stopping the gas transit. I don't know. This is what they're saying is a reason. We never know. I don't know. But that's what they're saying. And of course, will be significant in the coming days. Regardless, prices paid for people in Europe are going to go higher. Okay, that's why I show this. Partners Group to buy U.S. rental homes over $1 billion. And guess what? They're in the Sunbelt cities. Why? Because that's where the jobs are moving. That's where the people are moving into. And that's where the prices are generally more reasonable. Places like Miami, places like South Florida, those prices have gone up considerably, both rents and both, actual value of the homes. But just in general, that's what, that trend is definitely there. Then we look at this stock market. Amazon stock has lost all of its gains from 2020. Imagine that. All of its gains. Now, I've been covering that extensively. This is Amazon stock. I had loaded it up for you. It is now, and I was thinking of showing you actually in that previous video. As I record this video, it is at 2177. We saw this February 10th, 2020. Think about that for a second. All of those gains, all of that growth, it's gone. It's gone. I mean, you would have had to buy at the absolute bottom, March 23rd or let's say March 16th, in order to still see growth. I mean, now we're going back. I mean, just look at this. And if we go back even further, September 2018, it doesn't take much to get us back to this level. Anyway, the point I'm trying to make is that nothing goes up all the time. And people point to certain things. Tesla, let's just say Tesla, you know, they have this many cars on the road, or they're going to do a robot or a semi-truck. That does not necessarily factor into the stock price. We need to get that through our heads. Speaking of Tesla, Cathie Wood's famed market-beating return is disappearing. ARK total return since first day has dropped below the S&P 500. Fund has been hit by a sell-off across technology stocks. And here is the chart to show you. So my question to you is, do you prefer this black line, which is obviously ARK, this huge rise up and then fall? Or would you prefer a slower and steadier rise over the years? That is the S&P 500. What are you most interested in? Okay. And so I'm going to leave it there. I hope you do appreciate it. Yeah. So what I'm thinking right here is that inflation is a big factor. It's a big factor for stocks. It's a big factor for people. Their energy, their gas, their natural gas for their home. I mean, food, I mean, everything. Okay. So for everybody listening, every single day of the week, we need to be doing things that help ourselves out. Whatever your goal is. If your goal is, to reduce your expenses, every day you should be doing something in order to get there. Or else, how are you going to get there? Okay? Don't just sit on your hands. Don't just say, I can't do it. There are so many things that you could be doing on a daily basis to inch your way. If that's what it takes, baby steps, inch your way closer to that goal, you need to be doing it. This is essential. Okay? Don't think, it's too late or I missed the boat. No. Start today. Start today. That's my message. If you appreciate it, hit that thumbs up button. If you're not subscribed already, join the perpetual 282,000 people here on the channel, and I'll see you on the next one. Take care.